Welcome, ladies and gentlemen. Commodity TV here out of our home TV studio because of the Corona crisis. And once again, we want to talk with Professor Dr. Thorsten Denin, head of asset management of Asset Management Switzerland out of Zurich. And he's also at home, of course, as we are all. And we want to talk about Corona and the big bazooka. Thorsten, good morning and very warm welcome.
Good morning, Jochen. Nice to be here with you again, right?
Yeah, thank you very much for taking the time and honestly preparing such a fantastic presentation, which you are just uploading. That's great. And I would say let's dive into it. Corona crash, S&P 500. You were riding minus 35% and plus 15%. So that's because of the big bazooka, right?
Yeah, I titled it Corona and the Big Bazooka because this word is quite outstanding, where you see how to fight the crisis, yeah, and especially if your bazooka is like this big or like really big, yeah. So the first drop in the S&P 500 and in German or Swiss shares, it was dramatically. So now it's time to fight back. The fight back in terms of money measures. And the first promising ideas about pumping a fantastillion of new money in the market, this brought the market back by 15%. So you see this in this movement on the presentation. We dropped from this very high moment down to like 2,200 in S&P, back up 15%. So people thinking, yeah, is the crisis now over? And no, it's not, because we have this huge unemployment numbers. This is like the first glimpse that we've seen in the US. But this glimpse of a big bazooka, what can we do after QE? I titled it The World After Corona and QE, because QE obviously was not working in the last year, so we need something new, right?
Yeah, absolutely. So, but how shall this work with the helicopter money? They're just booking to everybody cash handout as you wrote, or you get like a wire on your account, or what is the chance? Because all the shops are closed. It makes to me not really sense.
Yeah, to have like a voucher for buying stuff, and you only can go to your supermarket and buy pasta and toilet paper, definitely is not the right thing to do. Yeah, but the concept are in the times when we are opening up again. And the first experiment here we've seen in February in Hong Kong, where every resident got like $1,000 in terms of a free helicopter money. I think it's like the rehearsal of what we can see in Europe, and especially we discuss this thing for Italy in the moment. The US was introducing, I said, it's like helicopter money. We're talking about economic stimuli and other concepts like your universal basic income, which comes up on the surface like on every little crisis. So the first ECB program, 750 billion, and a new whatever it takes, buying government and corporate bonds is definitely not the solution the market is looking for. We need something new and something fresh. And here comes the concept of helicopter money.
Crazy. But wouldn't that mean, as I see in your next slide, US national debt and the bad times are just beginning? I mean, I see it the same way. This will be never ever paid back, right?
Never. Yeah, this is quite easy to say. No, it's never being paid back because the government and the state is not like a private person, right? So therefore, the element of trust is coming in. I emphasize this chart. It's only the US national debt, but you see the debt development since the 70s for households, for corporates, for governments all around the world is growing exponentially because you don't have an anchor anymore. But the US national debt, it's so nice to see like the different debt ceilings. Yeah, you see in the presentation like here, debt ceiling, debt ceiling, debt ceiling, debt ceiling. When Mr. Trump said we don't need debt ceiling anymore because it's limiting our flexibility. Yeah, so this is the best of all times. This is Goldilocks scenario. This is like economic growth, and still the debt is piling up. And now we have the crisis what everybody was fearing, and we need another 2 trillion to start with in the US. So this is pushing the US national debt to almost 30 trillion US dollar in the next 2 years. So that's like more or less optimistically said. And this makes the case basically for the real asset sales, and maybe also to have the alternatives that you see to the current financial system. Because at some point, this is not working anymore, right?
Yeah, of course. And I think trust is really starts now to really lose, because people will realize that there might be first like a stagflation and probably afterwards a hyperinflation.
Yeah, so lots of things that are free are not necessarily good in this sense, right? Inflation is the one thing. I mean, looking at central bank balance sheets, it's just depressing when you see the central bank's balance sheet exceeding like the national GDP of countries like Germany quite easily. But it's only working when we have like ultra low interest rate. So the negative interest rates becoming the new normal, because otherwise you couldn't sustain this huge pile of debt, right? Even the government was doing like 25, 30 billion, or like a whole global debt level of almost 300 trillion US dollars. What happens if you have higher interest rates? Yeah, everybody's breaking
Unpayable.
apart, unpayable at all. So we don't talk that it's like being paid back anyway, but that you need to sustain, that you have to pay every year for some interest. So in the moment, doable, right? In the moment that interest rates are coming down, what do you think?
Yeah, it is crazy enough, and I don't see any rising interest rates, maybe for the lifetime I'm living, and I have approximately 40 years still in front of me. But the question to me is now, honestly, also like life insurances, pension funds, to save money when you go into pension. That's all obsolete, right? So why should people do that any longer? Why shouldn't they say, you know what, I do not save any longer money, I consume everything, and when I go in pension, you know what, then the state has to take care of me.
Yes, between the aunt and exactly the same clash of generations we have here. And you're doing it probably still because you're used to it. But to be honest, you're not getting anything on your saving account. You're not getting anything in terms of interest on your like credit account. Also, like your pension plan is not paying out anything more. It's not reaching its target, your insurance products. So therefore, this was the reason why the last years equity markets had this afterburner of performance. Yeah, because obviously money needed to get into equities or other risky assets, because safe assets didn't pay much dividend. And now we have a crash, and you see what happens to the base effect here, right?
Exactly, and then gold is for me the real big, or let's say the biggest winner of all, right?
In that system, it is at least the biggest and stablest markets that you can have. I mean, looking at real estate markets, even like public real estate products from UBS and Credit Suisse lost about 8 to 10% in the last weeks. Gold didn't. So gold was more stable than the formerly say like real asset gold. And gold is more on the currency side than on the commodity side. So therefore, the gold market gives you the protection in the long run. Now that you have like ultra low interest rates, and you've seen also like a small correction, and now the gold price is testing the 1680 level again. For me, it will be such a positive sign that we've seen the gold prices very soon to the 1800 level, when we just break this $20 to the upside.
Absolutely. So, but wouldn't that mean that gold and gold mining stocks are now, really getting into the loop and getting of high interest? Because when I look at your next slide, there is a huge gap in the valuations, right?
Yes, it's in the moment a huge gap. Like I really need to scratch my head when I see that. I was thinking we talked in beginning of 2016, Jochen, and we talked about this crazy situation. Maybe you remember when gold mining companies were valued basically the same amount of money when 16 years ago in 2000. I marked this with a little circle here. You see the gold price and gold miners almost do the same thing, but gold here was about 2,400, and now we had in 2016 a gold market of almost 1,400. So a huge margin, a huge difference, but gold miners were basically pricing gold much cheaper. So this is a situation that wasn't sustainable. So the gold miners shot up on that, but still on this level we are higher at in beginning of 16. But still, it's a huge value gap. So gold miners need to catch up, because
Yeah, but so gold miners, let's say with all-in sustaining costs, let's say below 1100, 1000, this is what you are looking for, because they have a great margin. Still, if gold would come down, which I don't see, honestly, they still have enough cushion to really still earn money, right?
Yeah, the thing is, in this situation where you have economic crisis and a negative economic outlook, which business model gives you like a positive free cash flow? Oil companies probably
Yeah.
don't have at $20 crude now. Consumer stocks, some pharma stocks maybe. Yeah, but the majority of equities in terms of our outlook has a negative earning potential. And gold miners have first a very big, huge free cash flow margin, have a low valuation. Yeah, and therefore I see there's a tremendous upside potential because people don't realize that now. They will realize when the gold price is approaching 2000, and when we see probably like a doubling, and tripling of gold miners quite easily.
So reasons to own gold. What is it? Gold is money.
Gold is money. Well, I think, Jochen, there's not much more to say. Gold is money, money is gold, everything else is credit. So said JP Morgan a couple of years ago. But there are still some differentiations in terms of people who are flocking into the ETFs or paper gold, or like having like certificates where you have like counterparty risk. Therefore, you need to be careful on that perspective. So therefore, not all that shining really is gold. Yeah, but gold plays its strength when the fiat money system, so the euro and the dollar and like the system we have in place gets into trouble, and this is exactly now. So we don't need to talk about the risk management, portfolio diversification, and the inflation protection. When you just imagine when you have helicopter money around the corner, of course, like prices of goods need to rise, not the real price, but inflation needs to rise, and then like this is basically the bazooka shooting back at the gold market. And that's, I think, a scenario what we would like to see.
Fantastic. I read here mining companies are capitalizing higher gold prices twice, P&L and balance sheet. What is P&L, please?
Other profit and loss, like what you have when you're selling your gold ounces in the market. I mean, there are two effects, and this is quite interesting to see on that. Because when you're a gold miner and you have like your parcel of land, you're sitting on a land that has like some economic resources of gold. And of course, when the gold price is rising, your accountants will say, look, your gold that you can mine economically is not worth 10 million anymore, it's 12 million or 15 million. So this is like the balance sheet effect. That's the one thing. It's the first level of leverage. The second is because you're every month, every day, you're producing some gold and you're selling at a higher cash prices. So this gets directly in the bottom line of your P&L. That's rising your sales, that's rising your profit. So by combining like balance sheet and your profit, therefore comes this natural leverage of gold mining companies to the gold price. And this works, to be careful, in both directions, right?
Absolutely.
Because when the gold price is rising, means like your average gold company goes by 2.5%, 2.5 times gold price, but this on the way up and also on the way down.
Absolutely. Yeah, and I like this also as a fantastic final sentence. Since 2000, gold is in a bull market. A rise above $2,000 is likely in the coming years. So don't you think that we see the 2000 sooner than in several years? My feeling is if we move on like in that speed, we have on Christmas $2,000 easily.
I wouldn't have something to say against it, Jochen. I would love the situation. Therefore, I don't think in a stressy scenario that the gold market and the gold price has a limit, because there's no physical boundaries for that. So we can see even much higher gold prices if the situation comes true. But I think under normal conditions, it's not including Corona and the crisis of economic system, the 2,200 level is like a natural path, just combining the monetary amount of printed money in the system.
Absolutely. Fantastic. Well, Torsten, thank you very much. And as we see also here further questions, so the people can send you probably also an email, I would guess and suggest. And also we see here your latest book, From Tulips to Bitcoins, very valuable, very good to read. It's in German, English, and in Russian. So I really recommend to our viewers here to have a look on that. Torsten, thank you very much for your highly valued time. And it's always great to talk to you. And I think we probably do an update next week, as I have the feeling like hourly we have some changes, right?
And the price is moving that hard. Our gold prices came back up, and now the equity market moves down. Would be lovely to see you again, Jochen, next week. In the meantime,
Super.
if you guys have any questions, just drop me an email or contact me on LinkedIn or anything else.
Fantastic. Torsten, thank you very much for your time. All the best. Have a great weekend. Stay healthy. And yeah, we talk next week. Thank you.
See
Yeah,
you.
ladies and gentlemen, that was Professor Dr. Torsten Denin, Head of Asset Management from Asset Management Switzerland. And yeah, you heard it. I think there's nothing really to add and also not to summarize. Times are tough, but gold miners are extremely cheap. So it's really worth to have a look on that. And also it is really, really important, as we see now, we were saying this for several years, at least for 10, 15 years, to have some physical gold, to have some physical silver. It is still the best insurance. It is real currency. So first of all, stay healthy, have a good bottle of red wine and a gin tonic against Corona. Thank you very much for watching us. All the best and see you next week. Bye-bye.